I would say 10 trillion might be where I'd look it to peak out at. Whether it gets there or not doesn't really matter. But then, so that's a sort of a 10 trillion is a 10x from here and a 3x from the high.
Hey everyone, and welcome back to Finance Wolf. In this video, Raoul Pal talks about Bitcoin ETF and the crypto market. People who work and trade will only put money into the crypto market if they think it is growing quickly right now, says Raoul Pal, the ETF of the crypto world as a country. Since this is a new trade deal, it doesn't mean you have to trade when it comes out. It just means you can. For the ETF to bring money into the crypto market, prices have to be going up. Raoul Pal doesn't think it's a big deal now, but it will be in the long run. He also doesn't think the crypto market will drop to new lows. Or we'll just don't have cash falls apart out of the blue, which isn't going to happen because there will only be death and damage. Most importantly, that shouldn't happen now. That's when money should be coming into the cycle, not going out, and lots of that.
A 50 trillion market cap because you've got things that are liquid, so they go up more. Right? If something's perfectly liquid, like the T-bill market, 50 billion in doesn't move the market because it's perfectly liquid. So with this, you don't need that much going in to make it 50 trillion. You don't need $50 trillion going in, but if you put in $1 trillion. So really, if you think about it, I think of it as the crypto economy as a digital network state, borderless. And what you need is foreign direct investment to come in. So one of these trade agreements will be the ETFs. So if you think about it, that's a trade agreement between the traditional world and the new world. And so the money will flow in. So let's say 20 or $30 billion goes into that. That'll move the market cap by $200 million, a 10x multiplier. I don't really know the numbers of the multipliers. But don't forget, if you start putting the financial system on top of these rails, that generates economic activity at blockchain level. So Ethereum earns more fees generate into the system, all of these kind of things. So I don't think it requires all the liquidity in the world. But again, my 50 trillion number is probably 2030. So we got time to get there as well. Yeah, I'm about the same. I would say 10 trillion might be where I'd look it to peak out at. Whether it gets there or not doesn't really matter. But then, so that's a sort of a 10 trillion is a 10x from here and a 3x from the high. The next time around, if it goes from 10 trillion to 50 trillion is a 5x. It's actually a lot less over time. So it's all doable. So the easiest way to start is open a Coinbase account. But then you've got the risk of having an exchange. Now, Coinbase is a very good exchange, or Kraken, or whatever. The next phase is, okay, if you want to self-secure your assets, which I think is a really good thing to do, the right thing to do, you just buy a ledger device. Simple as that. So you execute it on your Coinbase or Kraken or whatever, you transfer it to your ledger, that's it. It's like in the gold world, you could do the same, but you'd have to go and set up a gold storage account, and it's a pain in the ass. This little electronic device costs you very little money, changes your life because you're in control of your assets and nobody can take them from you. This is when you're engrossed in markets, particularly in bull markets, or even in the really worst parts of bear markets, you tend to get sloppy with your operational security. You kind of leave things on an exchange. You're clicking on a MetaMask because you desperately want to get this NFT and you click the wrong link, and you really, really have to get your operational security cleaned up as fast as possible, and just think before you act. It's really important. And a lot of the people just did it by mistake because they're rushing to do something, or they put free money on the table. Generally there's no such thing as free money. So when you think there is, you're about to be somebody else's lunch.
It reminds me of the cryptocurrency market, says Raoul Pal. It's a state of computer networks without borders, and what you need is a direct investment to come in one of these trade deals, which, to put it another way, is a trade deal between the old and the new world, and they got the money. A lot of money will come in, so let's say 20 or 30 billion go into that. Would you like to raise the market value by $200 million or 10 times? If you start building the financial system on top of these lines, don't forget to know the power of the multipliers that make the blockchain economy work, which means Ethereum.
Well, obviously bonds, because they've got their own story going on, which is the issuance of new bonds to pay interest on the old bonds and stuff that, forms part of the everything code, which, is the reason I think that we get more cowbell in the end anyway. Everything else seems pretty consistent. We're early stage, we're macro spring, crypto spring, things like copper haven't yet taken off because we've not really got into that phase where the global economy's yet recovered. Oil's starting to lead a little bit. No, it's pretty, for me, it's really quite consistent with where it should be according to the macro indicators. So I don't see anything driven by the geopolitical cycle that is changing anything. The only thing is the bond market being driven by excess supply. I don't think we need an ETF to go to the bottom, to go up. So I think that's a red herring. The ETF, as I said, think of crypto world as this nation state, and this is a new trade agreement. So when the trade agreement comes, it doesn't mean you do trade, it means you can do trade. People will only invest in the crypto economy if they think the crypto economy is growing. So right now, you need prices to be rising for the ETF to be a funnel of money into the crypto economy. So I don't think it's as big a deal as people think, but when you look back, it'll have been a very big deal over time. And I don't think the crypto market goes to new lows. Unless liquidity collapses out of nowhere, which is just not going to happen, because then, it's just the death and destruction of everything. There's no reason for that to take place this late in the cycle. You should be seeing liquidity coming in the cycle, not withdrawing. I don't think we can, because we're giving them all away.
Right.
So no, I don't think they're available. Obviously, it is one of the big economies, and generally speaking, it's the same boat as the US in how the economy operates, but it has got the outsized housing issue, much like Australia does. And it seems like it's slowing down. Canada, like Australia, has been a beneficiary of foreign direct investment, which is Chinese and other, Pacific Rim capital coming into the space that drives it, plus the tar sands boom, plus the commodities boom. So Canada is very much like Australia, looks very similar. The Aussie one never really went bust. I don't know. I know everybody gets very bearish on Canadian property because it's so wildly expensive. At some point, it'll be a lost decade for property prices in somewhere like Canada, and prices won't rise. But I don't know. I'd love to have an answer for you. I just don't know.
Next time,
gold doing this tends to tell you it's a cowbell signal. It's like gold is pricing in something happening. Now, I think people like gold over geopolitical weekends like this as well as a hedge.
yes. Yeah.
Because you don't know what's going to happen and bonds aren't working. So what do? You go to gold. So my guess is some of this is weekend stuff. But look, gold is also driven by the liquidity cycle, very much like crypto. So a lot of people have been waiting for this to happen. So let's see if it continues past the weekend. But yeah, I mean, generally I've been bullish on gold. It's like Paul Tudor Jones was talking about, gold and Bitcoin. This is the right point in the cycle for these things.
Raoul Pal thinks that people like gold as a safety net, and on international weekends like this one, when you don't have to worry about what will happen. Bonds aren't working and no one knows what will happen, so Raoul Pal went to gold rule. He thinks some of this is just weekend stuff, but keep in mind that gold is affected by the liquidity cycle just like crypto. Raoul friend, we've been looking forward to this for a long time. Let's see how long it lasts after the weekend. It's kind of like what Paul Jones said about gold and Bitcoin. Now is the right time for these things in the cycle. If you learned something from this video, please click like and share it with your friends. Join our channel Finance Wolf, and we'll see you in the next movie.